Have you ever wondered what would happen if the housing market suddenly crashed again? Imagine waking up one morning, checking your phone, and seeing headlines screaming, "Home prices collapsing, millions at risk." Your house, your biggest investment, suddenly losing value overnight. Sounds terrifying, right? But here's the real question: is this just fear, or is it actually coming? Because what most people don't realize is, the signs are already there, quietly building, hidden beneath the surface, and by the time everyone notices, it might already be too late. Let me tell you something that might shock you. The last time this happened in 2008, millions of middle-class families didn't see it coming. They were working stable jobs, paying mortgages on time, living what felt like a safe financial life. Then suddenly everything collapsed. Homes lost up to 30%, 40%, even 50% of their value. People who thought they were building wealth were suddenly drowning in debt. And today, many experts are asking a dangerous question: are we repeating the same pattern again? But wait, here's where things get interesting. On the surface, today's housing market looks strong. Prices are still high. Demand hasn't completely disappeared. And people are still buying homes. So naturally, most people assume everything is fine, right? But what most people get completely wrong is, crashes don't happen when everything looks bad. They happen when everything looks almost fine. When confidence is still there, but cracks are quietly spreading underneath. Think about this. Right now, interest rates are much higher than they were just a few years ago. That means monthly payments are crushing for new buyers. At the same time, home prices haven't dropped enough to match those higher rates. So what happens? Fewer people can afford to buy. Demand starts slowing down. Homes sit longer on the market. Sellers get nervous. And slowly, the pressure starts building. It's like a balloon being inflated more and more until one day it pops. Now imagine a middle-class family. Maybe someone just like you. They bought a house recently at peak prices. They stretched their budget because everyone said, "Buy now or you'll miss out forever." Their mortgage is high. Their savings are low. Then suddenly the market shifts. Prices start dropping. And now their house is worth less than what they paid for it. This is where fear turns into reality. This is where people panic. And panic is what turns a slowdown into a crash. But here's the thing no one is telling you. This time is not exactly the same as 2008. And that changes everything. Yes, there are warning signs. Yes, there are risks. But there are also key differences that could completely reshape what happens next. So the real question is not just, will the market crash? The real question is, if it does, will you be one of the people who loses everything or one of the few who actually come out ahead? Because in the next part, I'm going to show you the hidden forces driving this market, the mistakes people are making right now, and why most people are walking straight into a financial trap without even realizing it. Now imagine this. You're sitting at your kitchen table, bills spread out in front of you. Your rent just went up. Groceries are more expensive than ever. Gas, utilities, everything feels heavier. And then you check home prices, hoping maybe now is the time to finally buy your own place. But instead of relief, you feel stuck. Prices are still high. Mortgage rates are even higher. And suddenly, the dream of owning a home starts to feel like a trap instead of an opportunity. This is the reality millions of people are living right now. And this is exactly where the real problem begins. Because most people think a housing crash only happens because of banks or big investors. But that's not the full story. The truth is, crashes are driven by everyday people making emotional decisions under pressure. Think about what's happening right now. Over the past few years, people rushed to buy homes out of fear. Fear of missing out. Fear that prices would go up forever. Fear that if they didn't act now or they'd be left behind. So they stretched their budget, took on bigger loans, accepted higher monthly payments, and convinced themselves it was normal. But wait, here's where things start to break. Now those same people are facing a completely different reality. Inflation hasn't gone away. Paychecks haven't kept up. And those high mortgage payments? They're starting to hurt. Really hurt. Suddenly, what felt affordable 2 years ago feels suffocating today. And when enough people start feeling that pressure at the same time, something dangerous begins to happen. Let me tell you a simple but powerful truth. Markets don't crash because of numbers. They crash because of human behavior. When people feel confident, they buy. When they feel uncertain, they hesitate. But when they feel trapped, they panic. And panic is contagious. One family decides to sell because they can't keep up. Then another sees prices dropping and rushes to sell before things get worse. Buyers step back, waiting for better deals. Sellers keep lowering prices. And just like that, a slow shift turns into a downward spiral. But what most people don't realize is, this entire cycle is deeply psychological. You see, humans are wired to follow the crowd. When everyone was buying, it felt safe to buy. Now that uncertainty is creeping in, people are starting to question everything. Did I overpay? Should I sell now? What if it crashes? These thoughts spread fast. And once doubt enters the market, it changes everything. Here's where things get even more interesting. Unlike 2008, most homeowners today actually have stronger credit and fixed-rate mortgages. That means fewer people are being forced to sell immediately. Sounds like a good thing, right? It is, but it also creates a strange situation. Instead of a sudden crash, we could see something slower, more painful, a market that quietly declines while people are stuck, unable to move, unable to upgrade, unable to breathe financially. And that's the trap. People aren't just at risk of losing money, they're at risk of being stuck in the wrong financial decision for years. Paying high costs, watching opportunities pass by, feeling like they can't escape. But here's the twist, and this is something almost no one talks about. While most people are focusing on fear, a small group of people are quietly preparing. They're not panicking. They're not rushing. They're watching, waiting. Because they understand something powerful about moments like this. And in the next part, I'm going to show you exactly what they see, the hidden opportunity inside a potential housing crash, and how some people turn situations like this into life-changing financial wins while everyone else is struggling. Now let me tell you a different story, one that almost no one talks about. While most people are stressed, confused, and frozen, there's a small group of people who are actually getting excited right now. Not because they're heartless, but because they understand something the average person doesn't. They know that every housing downturn, every moment of fear quietly creates opportunity. And the biggest wealth transfers don't happen when everything is stable. They happen when everything feels uncertain. Think about this for a second. Back in 2008, while millions were losing homes, there were investors, regular middle-class individuals, even first-time buyers who were patiently waiting. They didn't panic. They didn't rush. They observed. And when prices dropped far enough, they stepped in. They bought properties at discounts no one thought possible just a few years earlier. Fast forward a decade, many of those same people built life-changing wealth. Not because they were lucky, but because they were prepared when others were emotional. But wait, here's where things get interesting again. Today's situation isn't a copy-paste of 2008. There's no massive wave of toxic loans like before. Banks are stricter. Lending standards are tighter. So instead of a sudden collapse, we could see something slower, more uneven. Some areas might drop significantly, others might barely move. Some homeowners might struggle badly, while others stay completely fine. This creates a very different kind of opportunity, one that requires awareness, patience, and strategy. Now imagine this, instead of rushing to buy at today's high prices, you take a step back. You watch the market. You track how long homes are sitting unsold. You notice price cuts becoming more common. You start seeing sellers offering incentives, covering closing costs, dropping prices quietly just to attract buyers. This is not a crash headline, but this is where the shift begins. This is where smart buyers start positioning themselves. But most people get this completely wrong. They wait too long. Not because they're patient, but because they're scared. When prices start falling, fear takes over. They think, what if it drops more? So they wait, and wait, and wait until the market stabilizes again and prices start rising. And then suddenly, the same fear of missing out returns. And the cycle repeats. This is the emotional trap that keeps people stuck, buying high and avoiding low over and over again. Here's the psychology behind it. When prices are high, people feel safe because everyone else is buying. When prices are low, people feel unsafe because everyone else is scared. But in reality, the best opportunities often exist when it feels the most uncomfortable to act. Now don't misunderstand this. This doesn't mean you should blindly jump into the market if it starts dropping. That's not the strategy. The real strategy is control. Control over your finances. Control over your timing. Control over your emotions. Because here's the truth. The people who win in a housing shift are not the ones who predict it perfectly. They're the ones who are prepared for multiple outcomes. They have savings. They avoid overextending themselves. They don't buy based on hype. They buy based on numbers that make sense for their life. And here comes the surprising part. A housing crash, if it happens, is not automatically bad for everyone. In fact, for someone who is financially ready, it can be one of the biggest opportunities of their lifetime. But only if they know exactly what to do and what mistakes to avoid. And in the final part, I'm going to break down simple, practical steps you can follow starting today, so no matter what happens next, whether the market crashes, slows down, or surprises everyone, you're not the one panicking. You're the one in control. So now the question becomes, what should you actually do? Not next year. Not when the market crashes. But right now, while everyone else is confused, emotional, and uncertain. Because this is the moment that quietly decides your future. And most people, without realizing it, are about to make the same costly mistakes all over again. First, understand this simple truth. Your biggest risk is not the market crashing. Your biggest risk is making a bad decision under pressure. Buying a house you can barely afford. Taking on a payment that only works in a perfect scenario. Or worse, panicking and selling at the wrong time because fear took over. This is how wealth is lost. Not in headlines, but in small emotional decisions made at the worst possible moment. So here's where you start. You build a financial cushion. Not something complicated. Just a solid emergency fund that gives you breathing room. Because when you have cash reserves, you don't panic. You don't rush. You don't make desperate moves. And in a shifting housing market, that alone puts you ahead of most people. Imagine having the ability to wait while others are forced to act. That's power. Next, stop thinking like everyone else. Most people ask, is this the right time to buy? But the smarter question is this the right deal for me? Because timing the market perfectly is almost impossible. But controlling your numbers? That's completely in your hands. If a property makes sense based on your income, your stability, and your long-term plan, then it's a strong move. If it doesn't, no amount of hype should convince you otherwise. But wait, here's something most people ignore: flexibility is your secret weapon. In uncertain markets, the ability to adapt is everything. Maybe that means renting a little longer while prices adjust. Maybe it means buying a smaller home instead of stretching for a bigger one. Maybe it means exploring different locations where prices are more reasonable. The goal is not to win the market. The goal is to stay financially strong no matter what the market does. Now let's talk about the biggest mistake you must avoid: chasing the crowd. If people around you are rushing to buy because they're afraid of missing out, pause. If people are panicking and selling because they think everything will collapse, pause. Because both extremes are dangerous. The crowd is almost always driven by emotion, not logic, and following them blindly can cost you years of financial progress. Here's the twist that changes everything. Whether the housing market crashes or not, the real opportunity is not in predicting it. It's in positioning yourself so that you win either way. If prices drop, you're ready to take advantage. If they stay stable, you're not overpaying or overstressed. If they rise, you're already in a solid position. This is how smart people think. Not in predictions, but in preparation. So don't wait for headlines to tell you what's happening. By the time they do, the biggest moves have already been made. Instead, focus on what you can control today. Your savings, your decisions, your patience, your mindset. Because at the end of the day, the housing market doesn't decide your future. You do. And if you found this helpful, make sure you subscribe, because the next video might be the one decision that saves you thousands or even changes your financial life completely.